Good afternoon, ladies and gentlemen. My name is Clemens Hillmer. I'm a lawyer. I'm based here in Hamburg, and I'm a partner at the law firm Clyde & Co. And I have today the great pleasure to moderate this panel about multi-investing in shipping. And I would like to introduce you to our great panelists here, starting here right from the left, Bastian Hagebeuker. And Bastian is a partner at Blue Star Group and managing director, and at Windward Offshore. And then we have Torben Kölln. Torben is managing director at Leonhardt and Blumberg, a German shipowner, followed by Maximilian Rothkopf, who is a COO of Hapag-Lloyd AG here in Germany, followed by Henning Prinzen from Lila Global, and last but not least, Constantin Baack from MPC Container Ships ASA and CEO at MPC Capital AG. So, welcome, ladies and gentlemen. What does multi-investing mean in the shipping industry? I think we have a very selected panel here, and I would like to start my first question with Bastian. Bastian, how does your multi-investing strategy look like, and what does it mean for you?
Thank you very much, and good afternoon also from my side. I think multi-asset investing from our perspective as a firm can be simply described as how the firm evolved over time. We started with investing in long-term chartered container ships, and then over time it evolved into a company where we co-founded 2 years ago, a company which now owns and operates offshore wind service vessels. In between those two spectrums, we opportunistically invested in other vessel classes as well. So I would say everything, when you look at shipping as an investor and as an investment firm, I would like to highlight that, then I think everything you do is kind of driven by an opportunistic view on a specific asset class. And as soon as you do two things at the same time, you have a diversified investment strategy.
Thank you very much. And Torben, for you?
Yeah, thank you also for having me here, Clemens and Nicolas. Leonhardt and Blumberg is known as a container feeder owner to all of you for many years, for many decades. And when I started my career with Leonhardt and Blumberg in the 90s, this was a pure container play already at that time. All of us, we are all old enough, we all went into the Lehman crisis, and then we enjoyed 12 years of bad markets in the container market. So for us, it was obvious that when we survive that crisis, that we can go into the next crisis, but maybe not as blank as we were back then with only one market segment. So we did some research, and eventually in 21 we decided to enter the product tanker market. We made our first acquisitions on the second-hand side in 22. Today we can say it turned out to be a rather good timing. Market has been good since then. And as a third leg, we decided to enter the short sea MPP market, where we got the first new buildings in the beginning of this year. And we will continue to be on these three legs for the near future. We will have some new buildings in next year and 27 in both in tankers and container feeders, and short sea MPPs. And while we did that, we also continued to strengthen our container feeder fleet by doing all kind of modifications you do today, like bulbous bow, propellers, and all this kind. So the future of L&B will be on three legs. And when the wind is coming from the wrong side, hitting one segment, then the other two segments should be still good enough to support the one weak segment.
Okay, thank you very much. And Max, I'm very curious to hear about the multi-investing strategy of Hapag-Lloyd.
Well, we are pure play container business. On the other hand, we have a very sizable, not only vessel fleet, but also box fleet, where a lot of investment is going to actually support the business. We have for a couple of years now heavily invested into terminals to strategically build up a presence in that segment, surely later than others, but we by now have 22 terminal participations around the world. And of course, we still do invest a lot in tech and people as well to deliver a quality that we aspire to, where we also try to differentiate in the market, and that also eats quite a bit of capital. So slightly different pure play container plus segment.
Interesting for the container boxes. Would you say that in particular container boxes that this business is in a way hedging your container vessel business?
No, it's enabling our business as we operate. We need boxes. Unfortunately, a lot of boxes these days, and particularly with the rerouting on the Cape, the efficiency of the box fleet went down dramatically for the industry. That triggered a lot of investment the last years.
Thank you very much. And Henning?
Yes, thanks very much for having me here. I mean, first of all, our company is a privately owned company, owned by one investor, so the strategy is a bit different. So far, we have been concentrating on purely an opportunistic approach of investing into ships. Therefore, our fleet, it's a wild mixture of everything. So we have a couple of Capes, Ultras, Kamsarmaxes, Handys. On the dry side, on the wet side, we have a VLCC, Suezmax, MRs, J19s, some container ships, some MPPs. I think even 2 years back, we had a cruise ship. So it's basically completely driven by opportunities so far. Yeah.
Okay, I think that sounds like a real multi-investing,
exactly,
what you're doing. And how is it in terms of operation or operating these vessels and managing these vessels? Is that something which is a special problem for you, or?
I wouldn't say it's a problem, right? I mean, it's a task, it's a challenge. That's for sure, especially because most of these ships are, let's say, mid-age to vintage age. And obviously, older ships have more troubles than younger tonnage, and definitely it's a challenge to operate. But we have third-party technical managers who relatively good manage these ships. And from the commercial side of view, it's at these markets relatively easy to get charters, right? So.
Thank you very much. And Constantin, for you, your multi-investing strategy?
Sure. Good afternoon from my side as well. I'm representing two companies. One is indeed a pure play container company, and the other one is MPC Capital. And on the MPC Capital level, we have a quite diversified set of activities. We are invested in ships, in assets, most prominently in container ships through MPC Container Ships. There we have a more strategic, long-term perspective, so maybe differentiating a tad from some of the fellow participants here on the panel, to say really that is strategic. We also have a strategic investment in maritime service business, where we have a joint technical management activity with 120 ships and some additional auxiliary services for more than 400 ships, more on the performance management and IT side. And then and that's the more opportunistic side of things, then we more opportunistically also invest in other sectors. We just recently bought, together with partners, small chemical tankers. We have been owners of dry bulk vessels, of MR tankers. So there's a tad of a more opportunistic leg and a tad more of a strategic leg when it comes to containers and maritime services.
Thank you very much. And where are your investors coming from, Constantin, and also at what returns are they looking at?
Well, the answer is it depends. And I mean, for example, on the maritime service business, this is us and a partner. So this is the balance sheet of MPC Capital. And on some of the more asset-related transactions, obviously, we have opportunistic investors on the opportunistical themes, which I would say have a return requirement of 12 to 15%. Is that always achievable? I mean, it depends. Again, I think on the container side, we take a way more strategic approach. So that means at the moment at MPC Container Ships, our clear goal is to renew the fleet. And renewing the fleet at 50% return is not possible, unfortunately. And there we certainly take a way more strategic view, accepting also lower returns in order to renew the fleet and grow. As far as the investors are concerned, global investors, obviously we have a strong footprint in the Nordics, being listed with MPC Container Ships in Oslo. So we have a broad range of investors from the Nordics, but we also have US-based investors, UK-based investors, and continental Europe, and to some extent also Asian investors, in particular on the more opportunistic side.
Thank you very much. And Henning, I mean, of course, you have only one investor, but may I also ask what returns are you usually looking at?
I mean, that's a good question, but obviously it has to be double digit, otherwise it makes no sense, right? I mean, if you have to cover cost of capital, ops, it must be double digit percentage.
Okay. And for you, Max?
Well, it should recover our WACC, of course. On the other hand, we also take a very strategic view on certain markets and investments. But I think that bundled together and also with a bit of a sustainability criteria these days, in particular in the last years.
Well, I guess you're asking me now?
Yeah, also, yeah. Particularly about your investors and returns you're expecting.
Yeah, it's a good question, and of course we can run all the mathematics sheets, and after so many years I find out that always my calculations are wrong. What we started to do so with our both family owners and also with their friend and family investors, we really start to analyze the different markets. And for example, when we started investing into the product tanker market, we couldn't say at all whether it will be a double-digit return or not. But at that time, it was a bet on that the vessels are cheap and the market is low, and the order book is not existing. So for us, it was logic that at some point, the charter rates should go up. And then we could have put everything into the mathematics sheets as double-digit return, or even, well, maybe not more than double-digit, but is it 10%, 20%? Nobody knew at that time. So it was more opportunistic about that. We said the market analysis is right. The market is going to come. Whether it comes in 1 year or in 3 years or in 5 years, we didn't know. But we had the confidence that it will come at one day, and then that we get our money back.
And do you see on your investment strategy like hedging effects? So if you say, okay, one area is not running so well.
Certainly the markets are not so much dependent to each other. The tanker market is running very different compared to the container market, for example. And then having the short sea MPP market, which is in euro donation, also not dependent on the US dollar. So we do have some sort of diversification in that and risk mitigation by doing so, having 3 different segments in different geographic areas.
Okay. Thank you. And Bastian, who are your investors?
So that also depends a little bit. I think we need to differentiate between the conventional shipping side, the container ship projects. There we basically executed deals on a project-by-project basis, where the investment thesis was quite clearly focused on specific returns we wanted to generate with charters that we lock in. On the new project, which we started, Windward Offshore, as a company 2 years ago, it's something very different. There we consolidated a base of shareholders and partners from within Europe, Greece, France, Germany, and also since a few months from Japan. The Marubeni Group is also a 25% shareholder in Windward Offshore. Here the strategy and also the investment thesis is very different. We are building, and we have been building, an integrated company. So we operate, charter, and technically operate our service vessels ourselves. And the approach here is very different because we consider the offshore wind or offshore energy market as being a market that also follows different parameters than conventional shipping markets, because it's a new segment, and therefore I would say it's a more long-term, evergreen entrepreneurial approach compared to the container ship projects where we focused on different elements.
Okay. Is that also partly based on the fact that many of your investors are like pension funds, and they are having a more long-term view on investments? Does it also have an impact on your strategy?
It should be. But to be honest, most of the pension funds that were invested in the container ship projects with a long-term yield approach are now also part shareholders in Windward Offshore. Okay. So the strategy is different, but the shareholders like to diversify on their end. So they try to select the project that they want to work in with us. And therefore they pick the risk profile and the investment profile based on their individual criteria.
And interestingly, you just mentioned your investments or your Japanese shareholders, Marubeni, and we can speak about that maybe in a minute. Before we speak about that, I would also touch upon the recent global developments. And I must say, just 1 week ago, my next question would have been, how do the USTR port fees as well as the Chinese countermeasures affect your strategy? Now, 1 week later, after the meeting between President Trump and President Xi, this has been suspended for 1 year. But my question is, how does this uncertain global environment has an impact on your general strategy, Tom?
Yeah,
It's an easy answer. Though.
it's an easy answer, yeah. Is there anything ongoing in geopolitics? I'm not aware of. No, but uncertainty is part of business and shipping, I think, for forever. Today we have obviously a market environment or a geopolitical environment which is more uncertain than maybe 20 years ago. The quick answer to it, or the brief answer is to it, you need to be agile. You need to be in the marketplace, you need to listen to people, you need to learn, and simply hear what's happening and what you can do to mitigate certain risks. I mean, I just explained that we are in 3 different markets, which are already in itself giving us a little more protection about external factors which are happening. And of course, all our businesses are affected by these discussions. Sometimes only at the morning breakfast when we laugh about the latest news from US maybe, and sometimes also during business life. So I think what we can only do about it is to be cool about it and not take every message and every headline you are reading for granted. Calm down, think about it, discuss with your colleagues, discuss with business partners around here, have plan Bs available if needed. And this is what you can do. I think it will be remaining challenging. And as you said, it's only suspended. It's not gone. Maybe that's the worst answer we could imagine. But maybe it's actually as it should have been expected. Nobody knows. But isn't it also good fun to live in these uncertain areas?
I don't know. Maximilian, what does Hapag-Lloyd? Is it fun for you?
Yeah, it's
the
fun.
operation of the vessels as COO?
It's mostly fun. Nevertheless, I think in particular the last couple of months and quarters have been very volatile. We have indeed started in summer to prepare for USTR 301, and we have been successful mitigating that with a lot of effort in the teams and around the world. Now it's gone or postponed or maybe comes back in a week or next year. Nobody knows. I think you said it rightly. You got to be agile these days. You have to be reacting very quickly to developments. You can't really plan the short term, but you also ask, does it have an impact on the strategy? I think we are still very clear on where we want to go towards 2030 with our strategy, and that did not change it on the short term. But it's definitely never boring these days for all of us.
Can you maybe tell us about your daily business a bit? How that is affected by these global changes?
Yeah, I mean, for us as an operator, also around the world and all the global trades, we have seen very big impacts from the tariffs on the short end. For example, when China went to 145%, we had quite a big drop in bookings in China and a massive increase in Southeast Asia overnight, and vice versa when it was revoked to around 30 or 40%. I forgot the number, it changes every day, so therefore we have seen a big explosion of demand for a couple of weeks, and that also shows you have to be agile in the way you redistribute and deploy your assets these days, and you got to be prepared to do things differently than you did in the past.
And Constantin, for you, how does it impact? Has an impact on your business?
I guess in general, it's a market environment, and that is linked to the uncertainty, but also to, I would say, throughout the bench, relatively high asset prices. That, in my view, managing what you can control best, and that is, for example, your balance sheet, to ensure in this market environment you're not over-leveraging. The operating leverage in the business is inherently significant because, we're going up and down, so not to add too much financial leverage is definitely one of the key parameters in our strategy, next to engaging a lot with our key customers into dialogue, discussion, in order to be prepared. But I think that's important. And obviously the agility part was mentioned before, trying to be agile. And I think to be agile, you need to have a sound balance sheet. And that's very important in my view. So that's clearly some of the key parameters in my view that you can do the things that are within your control. Everything else will happen one way or the other, and you should be as good positioned as you can in order to face these challenges and actually make opportunities out of them ideally.
Thank you. Bastian, Henning, what is your view on now after this meeting between Trump and Xi? Has everything now been sorted out? Or will we speak about this in 1 year here again? Any view on that?
I mean, I don't know. I don't think that everything has been sorted out. I think that would be naive to think it through, but it definitely is part of tactics, I guess. So I wouldn't say that now the world is different than the last couple of months. So I would actually, my perception has not changed, to be honest.
Henning?
I fully echo Bastian's view. But the good thing is, in our view, there are always opportunities coming out of this craziness, right? I mean, and if the craziness tomorrow is different craziness than today, but there's still always some opportunities, which is from an opportunistic strategy point of view, interesting, right?
Maybe let's turn to the financing of your multi-investing strategies, and particularly the debt financing. How does your financing look like? Are you looking at traditional European banks, Chinese leasing, other sources of financing? Also, when it comes to investors, which regions are you looking at? Bastian, you just mentioned Marubeni as Japanese investor.
Yes.
How does it look like?
Yes, they are equity investors, so they are shareholders. On the financing side, we very much like to cooperate, especially with regards to our modern tonnage on the offshore side, with experienced banks out of Europe. In this case, and it's public knowledge, we are cooperating with Crédit Agricole. These are new assets, so we need to have a strong partner here that understand the asset type. The fleet is young, growing. The company is young and growing, so that's why we focus there. But historically, we have also cooperated with alternative lenders on the debt side in the more traditional segments. So I think it's whether it's your equity co-investor and partner or your financing partner on the debt side, it's in the end it's a partnership. And therefore, you need to have for the specific purpose that you're looking for the right partners. And that is not purely defined by the terms. It's more or less defined by the terms plus further elements, I think.
And I mean, considering the global changes or developments we have discussed, also when it comes to China, there are also when it comes to Chinese leasing, certain issues related to Chinese leasing. Because possibly there's a risk that you don't get back your vessel in case of a sanction, or we have discussed these USTR port fees. Torben, does it mean also that you are, I mean, if you have done any Chinese leasing transactions, but are you also looking to diversify now to other jurisdictions? What is about Japan, for example?
Yeah, our fleet is financed in a diversified way. We like still to work with the local banks here from northern Germany, from the former Landesbanks, for example, and also Landesbanks. We like to work with project financing banks in Netherlands and in Norway, and the same we do in China, in US, in Australia, in Japan. So when it comes to debt finance, it truly became fully international for us. It's quite a lot of work because you also need to meet the people that you can build this relationship. But once you have done it, then you can, again, this agility is also reflecting or needs to be reflected on the financing side. And then it depends on the specific project you have in front of you, whether you decide to go for maybe a JOCO structure, which is a little more rigid, and you need to be sure about that vessel you want to keep for another 3-5 years, or whether you want to have an opportunistic approach where you want to sell the ship maybe within the next 1 or 2 years because you believe the age is due for selling it. So there you need to be agile, having plans in the drawer, and this is what we do actually.
And Max, I mean, for you, in particular for Hapag-Lloyd, having quite an exposure also to China, how are you looking at Chinese leasing and diversifying your financing sources?
I mean, I'm not the CFO, but definitely what we have always done, we had a very diversified source of capital, depending on the asset type, depending on the geography. Of course, in the past, Chinese leasing has been quite competitive. That is for a part of the fleet, but for sure we also with the traditional banks and many other means.
Yeah. But does it also mean that looking at the global developments that you try to diversify even more than in the past, and also looking at other jurisdictions such as, for example, Japan?
We always had,
No,
so
okay,
I think that's no change, of course, and it depends on the asset, it depends on the project. For example, on the container side, we've had JOLCOs for a long time. Actually quite happy about that, but that's not the only source and never will be, and therefore we are, by definition, for many years, very, very diversified.
Henning, maybe this is also quite interesting because who is financing? I think, of course, you have one investor. Who are your financiers? Coming from India or?
No, mostly not, because our company is based in US. So traditionally, we have a lot of US banks with whom we are doing financing, but also the traditional European banks we are talking to, and the operational headquarters in Dubai. So we talked a lot of these local banks in UAE. And lately we started because of the attractive terms at Japanese financing. Yeah?
Okay, also Japanese financing. Okay. And for you, Constantin?
I think a lot has been said already. I think that diversification is key. We do everything from ECA-backed over European banks, over the bond market. I think not to have a cluster risk, that I would probably state as a differentiator to what has been said before. This is for us key, not to have too much eggs in one basket, because and to have a way out. We, even when we did Chinese leasing, we had very firm view on having a breakage option, which is not common in Chinese leasing. We said we will only do it if we have a breakage clause at admittedly very high prices, but at least not a make-whole amount on the whole interest. So I think this is important, to still have flexibility and to not have a cluster risk next to obviously a highly diversified funding base across the stack of options available.
Okay, thank you very much. Now maybe coming a bit to ESG and regulatory aspects. Now the IMO has just decided to postpone their further discussions about the net zero framework agreement for one further year. And also, again, an uncertainty. How do you deal with that? Do you think this will be implemented at all, or does it now mean that you go away from green shipping, or how does it have an impact on your strategy? Bastian.
So my personal view is that the reason why ESG has been implemented over time as one of the core parameters driving investment decisions and driving the allocation of capital, the reason being that global warming is a topic that is not gone. It's just the perspective, and it's just not so much in focus at the moment. So I would say, yes, at the moment, it's maybe not the core driver of topics anymore, but I guess as global society, we're probably all coming together at the thesis that we should take care of it, and we will take care of it. So investment thesis per se has not changed through that, I would say. Yes, if you look at equity returns over the last couple of months, there were definitely different equity returns than on infrastructure and renewable energies related assets than there were maybe 12 to 36 months ago. But if you just look at, because the focus has shifted, but if you look at just very recent data points, I think valuations of established setups and firms offering technology which is related to renewable energy are trading at very high valuations. So I think there's still a focus on it from a capital perspective, but For shipping, I think the task remains the same. It's just a question of how sharp the regulation will be in short term.
Thank you. I mean, also given that, for example, Donald Trump said for the carbon tax, how he called it, we will not pay for that. Yeah. So maybe he will say to U.S. Customers, U.S. consumers, we are not going to pay for any carbon tax. Max, do you think this would have an impact on you because you are also chartering in vessels? And when they are trading with the US and you see that, there is no willingness to participate also in, for example, in the EU ETS scheme here in Europe.
Yeah, I mean, first, it's a pity that the IMO has postponed. I think we all wanted a global framework, and this is also needed. As you said, decarbonization is not going away, and we also stay course to further decarbonize our operation. We have very ambitious goals, and it would have been easier to fulfill these with a real global regulation. On the other hand, EU ETS is already in full swing. It's coming to the full effect next January. And that's not going away. What I fear is that we have just a lot of regional schemes, and that doesn't make it easier. Therefore, we and I still believe that a global regulation would help the industry a lot, also to decarbonize and have planning certainty also for investors, like we have here in the room, to actually know how the asset can perform and what is really paying off over time. It is clear that decarbonization doesn't come for free, and we also need customers to pay, including the US. We also see good traction on that in the last years, and even though we now have a setback, I do expect that we see a global regulation emerging, hopefully next year.
Okay, let's see. Constantin, do you have any views on that? How does it impact your strategy? Does it mean, okay, no green shipping anymore, or you just pursue your existing strategy?
Well, I guess it takes away certain opportunities. I would say it creates new opportunities. So I do think again we talked about adaptability, agility. I think the key question is how can you actually make on an opportunistic deal work, and on a strategic deal share the burden together with partners and find common ground. I think. As far as, for example, fleet is renewal concerned, when you look at MPC container ships, we clearly think that fleet renewal is not only about decarbonization, it's about efficiency, it's about lower costs for us and for our customers and having a more competitive offering. So I think this is probably not directly related to decarbonization, but it is positively impacting the emissions, right? So I think there are still a lot of, let's say, incentives that are not directly linked to decarbonization, but to lower consumption, etc. And we will continue to invest a lot in our existing vessels. This is also part of the journey. But at the same time, I do agree a global framework would be beneficial. I think it will be very challenging for certain or for smaller setups to comply with complex regulatory schemes all over the place, rather than having one scheme that regulates the whole carbon decarbonization on a global scale. So I think this is unfortunate, but I mean we will continue. And again, I think there are opportunities, there are risks, and we will all have to live with it. But it's not in the end, it's all about also doing things that make economic sense. At least we are not big enough to not invest with economic sense. We cannot put money into things that do not, give a reward for the risk that we're taking. So the calculator doesn't change, the scheme changes to some extent.
Thank you very much. Now coming slowly to the end, one last question, and that is, if you had $10 million to deploy, how would you invest it today and why? Maybe starting with you, Constantin.
Well, I would probably be very, very diversified. And I know this is a shipping panel and a shipping event, but I would definitely not only invest it in shipping, to be frank, because this would probably be the answer to invest in container ships or anything. But I would definitely spread it out as wide as possible, go into public markets, ETFs, global ETFs, probably go into private markets, VC, private equity, private debt, have some cash on the sideline in any case. I think this is very important in this environment. and probably also get some exposure to commodities. I know this is not a shipping answer, but it's my personal answer, and that's how I would invest. Obviously, otherwise you can always buy the MPC Capital share or the MPC Container Ship share. But, yeah.
So sounds well diversified. And Henning, what would you do?
Basically, I completely agree to Constantin's idea. But if you bring it down to investment into shipping, if you look at the order books and the fleet profiles, definitely go into a container feeder or a cape. That's for sure, because it's completely underbuilt.
Thank you. Maximilian, maybe you as Hapag-Lloyd, you have a joker. Yeah?
I have a joker, wow.
For you, it's not only 10, you have 50 million.
That makes it different.
Yes, different scope. First, I think we still see developing markets growing actually above average. And from a pure geography, probably Africa and Latin America with India are and remain the markets where we do see the biggest growth over the next year. So that's probably an interesting investment thesis. But with 50 million, you can also invest into mid-sized container ships, because this is still a segment that I think in the next years is quite underbuilt and requires, and particularly in the 6 to 7K segment, quite some investment.
Thank you. Torben, you can decide whether you would like to invest 10 or 50 million.
More than privately.
Well, I would invest 10 million probably, and may I split it as well?
Of course.
So, since I'm in shipping, I was wondering, there's always a group of people also within these conferences who are always earning money. It's regardless whether it's a good market or a bad market, and they give you legal advice. So probably half of my money I would invest into your company, Clemens.
You're more than welcome.
And the other half of the money, we talked about agility and about all the challenges, uncertainties, and for that we need people, good skilled people, and the other half I would invest into young talents and grow them.
Thank you very much and for your trust. Bastian?
I think I somehow follow almost what everybody has said here. I think I would not spend the 10 million immediately, that's one thing. I would spread it over a certain amount of time, because it's not only about investing, deciding in what you invest, it's also about timing. I think investing in the organization and in people is also something which is super important, especially when we think about agility. So that's good. And investing into service businesses as law firms in parallel to assets is also something good, because then you create at least per concept, you create also some income independent of asset price volatility.
Thank you very much. I think that was super interesting and shows also that in difficult times it's always good to diversify a bit your investment strategy. Gentlemen, thank you very much.